Hey YouTube, this is Zach with Achilles Financial, and today, amidst all of the market pullbacks and some of the back and forth action we've seen this month, I am looking at different directions that I can go to additionally build a position because there is a lot going on right now, and I think that that's set up some stocks to be on sale. So some of the things that I want to look at is 3 stocks in particular that I am going to be checking out and building up potentially some additional shares in. So the first one that I have here on the screen is going to be Abbvie, which is the ticker symbol, as you can see right here, ABBV. And these are essentially what I like to think of is the more expensive but higher dividend yield Pfizer. So Pfizer is a stock that we've talked about on this channel very often. And Abbvie is a company that does a lot of biopharmaceuticals, biotech, and they're importantly known for Botox. So let's take a look at the site. As you can see, Abbvie, they have all of their information available on their site. Everyone who's in biotech is getting into COVID-19. One of the things that I want to talk about though is they have all of their various therapeutic focuses, but in particular the pipeline, because this is where they have that future growth. Pfizer has a very strong dividend because it is using a lot of their profits to either go A, directly back into R&D, or B, to pay off their shareholders. So some of the different items that Abbvie is doing, or where the growth comes from, is on the device side in their pipeline. So you can see all of the different areas, and this is an easy way for investor relations to see what is in the pipeline, where are they going to go, and you can see that they have a lot in their pipeline. And this is very similar to Pfizer in that, again, you have a lot of capabilities to make some plays here and still achieve growth. So right now, let's head back over to the actual stock page. The key thing that I want to talk about right here is, as you can see, that annual dividend is right now sitting at just under $5, but it's at a 5.3%. So you'll see this stock on a lot of dividend aristocrat type pages. However, I very rarely invest in a single stock for the foreseeable next 30 years or so. Instead, what I'm looking for is stocks that I can trade for 3 to 5 years and then move on. So when I look at Pfizer, when I look at Abbvie here, the play that I want to make is get to 100 shares as soon as possible. Then I want to turn on, or during that time, I want to have dividend reinvestment turned on. The reason I want to get to 100 shares is so that I can do covered calls. And then what I want to do with that is build out positions, further enhancing the number of shares that I get. So right now it would cost under $9,000, and that would guarantee you some solid money in terms of how much you're going to be getting on an annual basis. So if you can get to 100 shares of Abbvie, which today is going to cost you approximately $8,860, then that's going to turn around and give you $472 a year. So if you were to purchase this now, you would get $118, which would give you another share, which means this would go up by another $5. In addition to that, you can sell covered calls, which again, we can kind of set some of the options alerts right here, where you could sell a end of the year covered call for $106, or this is actually the $90 call, so that would be $1,000. So there's a lot of moves that you can make with these stocks, and this is why I like to build out positions of 100. But the reason I highlight that I want to have that growth strategy with it is because my idea of Abbvie is I'd like them to be north of $100, which they were earlier this year. And then you can decide to keep or sell at that point in time. You do not have to hold a dividend stock forever just because it pays a dividend. However, if you're able to get in at this low rate and maintain a 5.3% on that initial investment in perpetuity, then that's a huge advantage. The reason this stock is on this list is, as you can see, it has had a healthy pullback, and there's a lot of potential for future growth surrounding the stock. Some of the challenges that face Abbvie is there is going to be repeated criticism and scrutiny surrounding the healthcare field, and in particular biopharmaceuticals, for how much they cost. However, I do recognize a lot of money goes into building the product, and you need to figure out the appropriate blend of subsidies as well as return on investment to encourage further development of drugs. So that is AbbVie. Again, great stock, and I am a big fan. So I'd love to have it more in my portfolio, but I'm still working on my 100 shares of Pfizer. So the next one that I would like to talk about, and you can see some of my other ones, the next one I'm going to talk about is Bank of America. This is a stock that we have talked about a number of our times on this channel. The reason that I have it up here today is, as you can see, we are rapidly approaching the 2.94% threshold, or the 3% threshold for an annual dividend. Again, I do not buy stocks to hold long-term for dividend yield, but I do want to be paid while I wait. So there is a lot of news, and you can see TD Ameritrade giving me some of the news surrounding why there is weakness in the banks. And I have for a long time seen that this is going to be a long-term play. And when I mentioned 3 to 5 years, I think this is going to be closer to the 5-year slate. I do have a dividend incoming associated with this, but they have slashed rates for banks, so I don't think that they're going to return to profitability anytime soon. However, they have enough capital on hand, they have enough recurring income to keep their dividend strong, and it'll enable me to buy additional shares here. So the reason that I like that is because I have the capability to purchase more and more. So for me to get to my 100 shares, then what I'm going to be capable of doing is essentially getting another couple $100 to purchase more Bank of America shares. So again, if we base all this off of a additional 100 shares, an additional 3 to 5 years, all of this will continue to grow. So again, right now we're looking at $72 a year, which is a far cry from the $700 a year we were just looking at. However, you can see that this is a much lower entry point, and I can still do covered calls, albeit if you look at the options chain, these are really not that expensive or not that great. Even if you go all the way out here, again, this is $77, nothing crazy, but you can still purchase 3 shares. So there's a lot of moving parts in the financial industry right now, but the reason I like it is the low entry point, the dividend, and again, my exit point would be anywhere between $30 to $34, which, as you can see, they were actually back here during that point in time last year. So at the beginning of the year, they were actually about $100, and this is just a percentage comparison chart. So they have dropped off pretty dramatically, but from an actual price perspective, they were closer to the 34, 36. And you can see, yeah, 35.72 is the 52-week high, and they're on the lower end of that. I like to buy stocks when they're closer to the left side here. So I am a big fan of Bank of America. Again, they have a lot going for them, and there's just a lot to look forward to. Lastly, let's talk about Taiwan Semiconductor Manufacturing, a company that's been on here very often. I like this one a lot because these are the suppliers for a lot of AMD and NVIDIA chips. So let's take a quick look at their website real quick. So this is a really cool company. They do a lot. One of the different items that we can see, again, all the financial services and such, but there is a lot of information and concern or in association with some of the stuff that they produce. So there is a lot that they build, there is a lot that they supply, and they are continuously growing. I am a huge fan of this company. They are one that I've been talking about since they were around $50 a share earlier this year, and there's just so much to do, and I really want to build a bigger position in this company. At this point in time, I only own about 2 shares. Let's head back to the website, or the TD Ameritrade. So these guys are a titan in their field, but that doesn't mean we need to stay completely away from them. One of the things that I am concerned with them is they do have a major relationship with China, and we need to be worried about that because China can always make a move to go after Taiwan, and that relationship can be strained, as well as just any U.S.-Sino region animosity. So we need to be careful of that, but this is another company that does very, very well. Now, of the companies we looked at today, they definitely have the lowest dividend. However, I am much more growth oriented on this company. However, as you can see here, we've got a $170 dividend, albeit while that is better than Bank of America, the cost to get to that 100 shares can be seen here at $8,000, which is a lot closer to what we just saw with Abbvie. However, I want to make it apparent that just because this is closer and the dividend yield is less, this has a lot more growth capabilities here. While I'm at this screen, I do want to highlight that this portfolio, if we were to build out 100 shares for each one of them, then you could see the total portfolio cost today would be under $20,000, and we would be generating $714 a year. And this is really not that bad. I mean, when we look at that, the average income is 3.7%, but $714 is nothing to laugh at, especially when we're reinvesting. So one of my goals for this type of portfolio would be to see an additional 10 to 20% growth. We are a lot closer to the high point for TSM, and the reason for that is because chip stocks have done very, very well. These are a huge supplier for NVIDIA, another stock that we talk about a lot, and there's a lot of advantages there. So one of the reasons I would like to get in here is because I think the chip industry is one that's going to continue to grow. However, I am planning to complete my Pfizer portfolio before I get over here to TSM, even though I only have 2 shares of this one. So there's a lot of moving parts, but all 3 of these stocks have a lot of growth potential, and they offer a dividend so you can get paid while you wait. So there's still a lot of cool stuff, but I like it a lot. So let me know in the comments below if you have stocks that you're watching, and if you found this video helpful, please leave a like and subscribe.